Welcome to another deep dive. This time, we're taking a closer look at Ethiopia's economy. And let me tell you, the articles we found are fascinating. We've got everything from banking reforms to a potential new stock exchange. Even some environmental protection measures are in the mix.
You know, it's really interesting to see how these articles go beyond the typical economic reports. It's not just about numbers and charts. It's a glimpse into a nation trying to figure out its place in a rapidly changing world, trying to modernize, open up to global markets, but also, protect its own people and resources. It's a tough balancing act.
Absolutely. And we're going to see some bold moves play out, like AliExpress, the online retailer.
Yeah.
They might start accepting birr.
It's a big deal.
Yeah, and there's this one bank that's taking a leap onto a brand new stock exchange. Plus, there's this whole story about a planned 115-story skyscraper project that, well, let's just say it's gotten a bit messy.
Yeah, that's one way to put it. And that's just scratching the surface. We're also going to dig into some of the challenges Ethiopia is facing, like a wave of overseas job scams that are just devastating families. And we'll talk about a major river that's so polluted it's practically lifeless.
Definitely a lot to unpack there. So why don't we start with the banking sector? The National Bank of Ethiopia is making some changes, relaxing reserve requirements for commercial banks. What's that all about?
Well, in simple terms, it means banks will have more flexibility in how they manage their cash. It should ease some of that administrative burden and could potentially free up more money for lending.
Okay, so that sounds like it could be a good thing, right? More lending could mean more investment, more economic activity.
You'd think so, wouldn't you? But it's not that straightforward. Some financial experts are a bit wary. They argue that these reserve requirements are there for a reason. They help to ensure financial stability. Relaxing them too much could lead to inflation or, in a worst-case scenario, even a banking crisis.
So it's a bit of a trade-off then. More potential for growth, but also more potential for instability. How are the banks themselves responding to these changes?
Well, we've got Sick Bank's perspective in one of these articles. They're a pretty big player with something like 7 million clients. And they've been active in the interbank market, lending a significant amount of money. They seem to be pretty happy about this increased flexibility, suggesting it could make them even more competitive.
So maybe we'll see them offering more loans at better rates. That could be good news for anyone looking to start a business or buy a house.
Yeah, potentially. But then again, if it fuels inflation, those same loans could end up costing more in the long run.
Right. It's all connected, isn't it? It's like what seems like a pretty technical change in banking regulations can actually ripple out and impact everyday people's lives.
Exactly. And it just goes to show how complex these economic systems are.
Okay, so let's shift gears a bit. Now, this next topic might seem kind of random, but stick with me. Excise stamps. The Ministry of Finance is getting ready to roll out a nationwide system to track and tax things like tobacco, alcohol, even bottled water.
It's all about trying to crack down on illicit trade, the stuff that's often called contraband. Goods that are smuggled and sold illegally, undercutting the businesses that are playing by the rules. The government's hoping to modernize tax collection, boost revenue, and make things fairer for legitimate businesses.
So far, so good. But then you start looking at how different industries are reacting, and it gets, interesting.
Yeah, it's not a one-size-fits-all situation. The alcohol manufacturers seem to be on board, hoping it'll level the playing field. They say they've been losing a lot of sales to contraband.
Right. Makes sense. And then there's the tobacco industry. They're facing this massive problem, like a 53% contraband market share. So they're obviously a bit worried about a fast rollout.
Yeah, they're concerned about ending up with all this untaxed inventory they can't sell.
Makes sense. And then you have the beer brewers. They're kind of skeptical, questioning whether it's even worth the cost. Apparently they're saying counterfeiting isn't a big issue in their industry.
Yeah, they're citing this research that suggests the costs of implementing the system might be more than the benefits they'd see.
So, on the one hand, you want to curb illegal trade. On the other hand, you don't want to create too much of a burden on businesses, especially the smaller producers.
It's a tough balance to strike, and it kind of makes you think, where do you stand on this as a consumer? Do you think the benefits outweigh the costs? And what about the government's role in all of this? Should they be regulating trade and potentially influencing the prices of everyday goods?
That's something for everyone to ponder, for sure. Okay, so let's zoom out a bit and look at Prime Minister Abiy Ahmed's push for trade liberalization. Essentially, he wants to open up Ethiopia's economy to more foreign investment and potentially make it easier to buy things from overseas. I mean, there's even talk of AliExpress accepting Burr, like we mentioned earlier.
We've seen this kind of approach across Africa, and the results have been mixed. Some countries, like Côte d'Ivoire and Rwanda, have seen pretty impressive growth. Others, like Nigeria and South Africa, have had a more uneven experience.
So it's not a guaranteed path to prosperity. And it seems like Ethiopia is facing that classic dilemma. How do you welcome foreign businesses and investment without hurting your own domestic industries?
Yeah, how do you avoid becoming too reliant on imports?
Yeah.
It's a tough question. And it's really important to look at the historical context here. You know, we've seen countries like Zambia and Ghana struggle with debt after liberalizing too quickly without putting the right safeguards in place.
That's a cautionary tale for sure. It's like you need to find that sweet spot. Benefit from foreign investment without becoming overly dependent on it, and definitely without racking up unsustainable debt.
Absolutely. And it goes back to something you touched on earlier, the choices we make as consumers. You know, are we buying locally produced goods or are we opting for cheaper imports? These seemingly small decisions actually have a real impact on the overall economy.
It's all connected. Okay, so let's turn our attention to a darker side of this economic transformation. We're talking about the rise of overseas job scams that are targeting Ethiopians who are hoping for a better life abroad.
These scams are absolutely heartbreaking. They prey on people's aspirations, promise these amazing jobs, and then they just vanish, taking everyone's money with them. It's a really complicated issue, fueled by lax regulation, a bureaucratic process for obtaining work permits, and these, frankly, shady agencies exploiting the system.
It's awful. And one of these articles tells the story of this guy, Masresha Alabel, who lost everything, his business, his savings, even borrowed money from a friend's cancer fund, chasing this false promise of a job in Romania. He was left with nothing.
It's tragic. And his story is not unique. Thousands of Ethiopians are falling victim to these scams, often because they're desperate for a better life and don't have access to reliable information. And the current system, with its backlog of something like 400,000 trained workers waiting for certificates, just creates this breeding ground for exploitation.
Right, like a perfect storm of vulnerability. And the government seems to be struggling to keep up. The Ethiopian Media Authority can't seem to control all the misleading ads on social media, and the Ministry of Labor is having a tough time cracking down on these unlicensed agencies that keep popping up.
And the impact on people's lives is devastating. There's this other guy, Getahun Bale, whose story is in one of the articles. He also lost everything to one of these scams, and now he's talking about suicide. It's a stark contrast to the hope and optimism surrounding some of the economic changes we were discussing earlier.
Definitely a sobering reminder of the human cost of these scams. And speaking of stark contrasts, let's move on to another cautionary tale, the Purpose Black scandal. This one revolves around a failed 115-story skyscraper project, the Kegabru Tower. It was supposed to be Ethiopia's answer to those iconic skyscrapers in Dubai, but it ended up becoming a nightmare for a lot of investors.
The company behind the project, Purpose Black ETH Trading SC, is now on trial for fraud and corruption. They're accused of basically running a scheme where they were selling shares in the company, but making it seem like people were buying apartments. Over 1,700 shareholders were left hanging.
There's this woman, Malet Akalu. Her story really stuck with me. She sold her property and moved to Addis Ababa because she thought she was buying a luxury apartment in this amazing skyscraper. Then she finds out she actually bought shares that are now basically worthless.
And the whole thing just unraveled in a spectacular way. The deal for the land fell apart because of payment issues, and then the founder of the company, Thesia Ashetu, fled the country.
Wow, what a mess. But it does raise some important questions about risk, doesn't it? It's like, when a market is changing so rapidly, there's this potential for exploitation if people aren't careful, if they don't do their due diligence.
Absolutely. It highlights the need for greater transparency and accountability in the financial sector. Investors need to be protected, and those who engage in fraudulent activities need to be held responsible.
Agreed. Okay, for our final topic in this part of the deep dive, let's shift gears and talk about the environment. Ethiopia is dealing with a pretty serious pollution crisis, and the Ministry of Water and Energy is proposing a new law to try and address it.
The main focus of this law is to establish something called riparian buffer zones around rivers and lakes. These are protected areas where certain activities like construction or farming would be restricted or even banned. The goal is to prevent further damage and give these ecosystems a chance to recover.
The real focus here seems to be on the pollution in a lot of Ethiopia's waterways. The Akaki River, which flows through Addis Ababa, is a prime example. It's basically lifeless. All you'll find is industrial waste and sewage.
It's really sad. And it's not just an environmental problem either. It directly affects people's lives. Like there's this farmer, Haftamu Senyu, who's featured in one of these articles. He relies on the river for irrigation, but it's also contributing to the pollution problem by using chemical fertilizers and pesticides. It's a tough cycle to break.
Yeah, it sounds like a real dilemma. And this new law, even though it's well-intentioned, is likely to be controversial. It could force people to relocate, could restrict how they make a living, and might even lead to homes being demolished if they're too close to the riverbanks.
It's a tough situation, no doubt. And it really highlights the difficult choices that come with environmental protection. How do you balance the need for economic development with the need to protect the environment?
It's a tough question, and there's no easy answer. But one thing seems pretty clear. If Ethiopia wants a sustainable future for its people and its environment, it needs to find a way to break this cycle of pollution.
Definitely. And it's going to take more than just new laws. It requires a change in mindset, a recognition that economic growth and environmental protection aren't mutually exclusive. They're interconnected in a really fundamental way.
Lots to think about there. And we're just getting started. Stay tuned for part 2, where we'll delve into a major development in Ethiopia's financial sector, the launch of the Ethiopian Securities Exchange. We'll explore what this new stock exchange means for the country's economic future, and look at a pioneering bank that's taking a big leap into this uncharted territory. So we're back. And this time we're really diving into a potential game changer, the launch of the Ethiopian Securities Exchange. It's called the ESX for short. And it's supposed to open sometime in 2025.
It's basically a brand new marketplace. Companies can list their shares there, allowing investors to buy and sell, ownership in those companies. It's a huge step for Ethiopia's financial system, really a sign of maturity, and, it could attract a lot of investment, both domestic and foreign.
And there's already a trailblazer, right?
Yeah.
Wigagen Bank. They're going to be the first Ethiopian bank to list on the ESX. That's a pretty big deal, right?
It's huge. It sends a signal to the world that Ethiopia is serious about developing its capital market. And it gives Wigagen this unique position. They could attract investors who are eager to get in early on this emerging market.
Now, I remember you saying this isn't a typical IPO. It's not like the bank is issuing new shares to raise capital. You called it a listing by introduction. Can you explain that for those of us who, don't spend all day on Wall Street?
Sure. In a listing by introduction, the company isn't selling new shares. It's more about creating a platform for existing shareholders, so they can trade their shares more easily. It's about increasing liquidity and making the company's shares more accessible to a wider range of investors.
So it's kind of like opening up a new storefront where people can come in and trade Wigagen shares.
Yeah, that's a good way to think about it.
Okay, so tell me about Wigagen itself. What's their track record like?
Well, they're a well-established bank. They've been around since 1997. They have over 400 branches across the country serving millions of customers. They faced some challenges for sure. The conflict in the north forced them to close some branches. And like a lot of businesses, they were impacted by the pandemic. But they've shown they're resilient. They're committed to growth. In fact, they've even resumed paying dividends after a 2-year pause.
Sounds promising. But are there any concerns about Wigagen? Things that potential investors should be aware of?
Well, there are always risks, right, with any investment. Some analysts have pointed out that Wigagen relies heavily on a small number of large depositors. And, if those depositors decided to withdraw their funds, it could create problems for the bank.
That's a good point. And I guess this new transparency that comes with being listed on a stock exchange, that's meant to help investors assess these risks, right?
Exactly. Wigagen has to publish something called a prospectus. It's a detailed document outlining their financial health, their risks, their plans for the future. It's where investors can really dig in and see if the company is a good fit for them.
But I've heard those prospectuses can be pretty dense, full of jargon. Are there any red flags that stand out to you? Anything that makes you go, that's a bit odd?
Well, there's this analyst based in London, Makbib Tesfaye. He's raised a few points that I think are worth considering. For one thing, he thinks the prospectus could be more transparent about potential legal issues. Apparently, they've set aside a significant chunk of money to cover legal liabilities, which could impact their profits.
So maybe some things they're not being completely upfront about.
Hard to say for sure without more information. But it's something investors should definitely look into. And, Makbib also has concerns about their corporate governance structure. He's basically questioning how effectively the bank is managed and overseen.
Makes sense. Good governance is essential for any company, but especially a bank.
Absolutely. And then there's the issue of digitalization. Mekbib thinks Wagagen needs to invest more in that area if they want to stay competitive. The world's moving toward online and mobile banking. Ethiopian banks can't afford to fall behind.
Right, they need to keep up with the times. So it sounds like there are some risks and challenges for Wagagen as they enter this new chapter. But let's step back for a moment and think bigger picture. How viable is this new stock exchange, the ESX? Can it really thrive in Ethiopia's current economic environment?
That's the million-dollar question, isn't it? There are definitely challenges. Ethiopia's financial system is still developing. The ESX needs to attract enough companies and investors to really be successful. And then you have these broader economic factors to consider, right? Inflation, foreign currency shortages, political uncertainty. Those are all things that could make foreign investors a bit hesitant.
So it's a gamble, in a way.
I mean, every investment involves some risk, right? But, there's also reason for optimism. Ethiopia has a large and youthful population, a growing middle class, and a government that's committed, at least on paper, to economic reform. If they can create a stable, transparent regulatory environment, there's huge potential for growth.
But that's a big if, isn't it? I mean, we've seen how corruption and a lack of transparency can really derail projects. Like that whole Purpose Black scandal comes to mind.
Yeah.
It seems like building trust is crucial for the ESX to succeed.
You're absolutely right. Trust is everything. Investors need to feel confident that their money is safe, the rules are fair, companies are playing by the book. Without that, it's going to be an uphill battle.
Wow, we've covered a lot of ground, haven't we? Banking reforms, a potential new stock exchange, that skyscraper scandal, even a polluted river. It's a lot to take in.
And what strikes me is how all of these stories kind of point to this underlying tension. Ethiopia trying to balance economic openness with the need to protect its own people and resources.
Yeah, it's a complex situation. No easy answers. So let's zoom out even further, look at the bigger picture. Where do you see the greatest potential for growth in Ethiopia's economy?
Well, one sector that has enormous potential is tourism. Ethiopia has incredible cultural and natural treasures. Think about the ancient rock-hewn churches of Lalibela, the Simeon Mountains, the vibrant culture in Addis Ababa, things that could attract visitors from all over the world. But there are some hurdles, some real challenges they need to overcome.
Yeah, we've seen those same challenges pop up in other sectors too. So what specifically are the challenges for tourism?
Well, political instability, that's a big one. It can really deter tourists. And then there are the limitations in infrastructure, roads, airports, hotels. They need to improve those if they want to handle a larger influx of visitors. And then, of course, there's the perception of safety. Ethiopia really needs to create a secure and welcoming environment if they want the tourism industry to truly flourish.
Interesting, because those challenges, especially infrastructure and stability, those are relevant across so many sectors.
Absolutely. These are systemic issues that Ethiopia needs to address if it wants to unlock its full economic potential.
Now, what about remittances? We talked about those horrible job scams targeting people who want to work abroad. But for a lot of Ethiopians, working overseas and sending money back home, that's a lifeline. How can that be fostered and protected?
You're right. Remittances are so important. They provide a vital source of income for countless families, and they contribute significantly to Ethiopia's economy as a whole. I think the key is to create more legitimate pathways for Ethiopians to work abroad, make it easier to get work permits and visas, and of course protect those workers from exploitation. If they can do that, remittances could become an even more powerful driver of growth.
So it seems like it all comes back to those systemic issues we've been talking about, right? Those bureaucratic hurdles, the lack of transparency, the vulnerability to corruption. They need to address those things.
Exactly. And that brings us to another vital resource that Ethiopia needs to leverage. Its diaspora community.
Right, the Ethiopians who are living in other countries but still have strong ties to their homeland.
Yes. The diaspora can play a huge role in Ethiopia's development. They bring valuable skills, connections, and investment capital, and they can be amazing advocates for Ethiopia on the global stage.
But we've seen how a lack of trust and transparency can really deter investment, even from people who genuinely want to help. How can Ethiopia make itself more attractive to diaspora investment?
It really comes down to creating a welcoming and enabling environment. Streamline those bureaucratic processes, ensure there are legal protections for investments, promote transparency and accountability, those are the things that will attract diaspora capital.
So it's that trust factor again, not just for foreign investors, but for engaging the diaspora and really building a more inclusive and prosperous future for all Ethiopians.
Couldn't have said it better myself. And this leads to a broader point about Ethiopia's economic future. It's not just about policies and markets, it's about the choices that individuals, businesses, and policymakers make every day.
It's about taking responsibility, right? Being aware of the impact of our decisions.
Exactly.
That's a wrap for today's deep dive. Thanks for joining us.